Happy Fed Day, everyone. Jerome Powell held his press conference today in which he, I guess, summarized the meeting of the Fed Open Market Committee. And he had quite a bit to say. He had some bad news for equity prices. He had some bad news for people who own stocks. And that's that it sounds like they're going to raise rates in March. It's a sure thing now. A quarter-point rate hike. And this isn't super unexpected in that the Fed has kind of been forecasting that anyway. They've been floating the trial balloons about it. They've been warming people up to the idea. And Powell has a tendency that once he said something, he wants to go through with it, even if he doesn't want to do it by the time it rolls around, just so that he appears more credible and sounds like a man of his word. I, of course, have said, there won't be rate hikes. Okay, maybe there will be a rate hike. But I'll put it this way. We're going to have net zero rate hikes for 2022. Right now, Powell is acting like he doesn't care about the stock market, like equity prices and asset prices in general, like they don't matter to him. Oh no, I'm concerned about employment, and I look at the labor market. It's so tight right now. It's a very hot labor market. Labor's in such strong demand. I think we got a lot of room to raise rates without negatively impacting the labor market. That's the big quote coming out of this. That should be the headline. That Powell thinks he's got a lot of room to raise rates. Now, he didn't use the term a lot, but that's basically what he said. Now, that's what Powell's saying now. But if there is a sufficient enough decline in stock prices, that's going to change. He's going to say something different. But for now, he's boxed himself into a March rate hike, which I don't think they can back out of it at this point. They didn't say it was a sure thing. He said that, oh, well, the committee is, of a mind, I think was the term he used. It's of a mind that, we're going to hike rate. They're going to hike rates 25 basis points in March. Now then again, now that Powell has all but confirmed the March rate hike, it's going to be priced in to the market, which means if he reverses and says, never mind, we're not going to do that March rate hike, that would be seen as, supremely dovish. Let's put it that way. And I wouldn't rule that out at this point because it's a long time. We've got over a month before March. Actually, the March meeting would be at the end of March. Because today, this was the January meeting of the Fed Open Market Committee. So yeah, we've got 2 months. And in that time, the American economy could come completely unglued. Things could be falling apart all around us. And in that environment, you think Powell's going to raise rates? If, let's say, the S&P was down 15% at that point, which is not unrealistic at all. I mean, 2 months it could be down 20%. If we're in a bear market, you think that Powell's raising rates? No matter what inflation is, to leave inflation aside, because the Fed's not that concerned about inflation. Sure, they're acting like they have to now, and apparently the Biden administration is quite upset with Powell for letting inflation get out of control like it is, and they want the Fed to do something about it, which is rare. Normally, the White House is bullying the Fed about being too hawkish on inflation. But I guess it's bad enough now that the Biden administration recognizes they need to get inflation under control. So you've got some interesting cross currents of interests at play here. And it'll be interesting if the pro-stock market, pro-real estate crowd is able to overwhelm and continue to suppress the increasingly large anti-inflation crowd. Now, obviously, amongst the general public, inflation is going to be a much bigger concern than the stock market. But even within Washington now, because the inflation issue is becoming such a big deal to ordinary people, perhaps the stock market can afford to take a back seat for at least a couple months. But if that's the case, it's really a stark choice. If the Fed tries to fight inflation, A 25 basis point, which is a 0.25%, by the way, going from 0% interest rates to a 0.25% interest rate, that's not fighting inflation. In order to fight inflation, you need to raise interest rates above the rate of inflation. And in most cases in the past, you've had to raise them significantly higher than the rate of inflation. So if we got 7% inflation, and that's the official number, that's not even, the shadow stats number, which is more accurate historically speaking, we probably got inflation comparable to, 1980 when Paul Volcker jacked up interest rates. And if you remember correctly, he raised rates to 20%. And so what Powell, if he continues down the path that he's acting like he's going to go down, which I don't think he will, if he just, incrementally starts raising interest rates by a 0.25 basis point, not only will that not contain inflation, if the Fed is the one causing inflation to begin with, it will still crash risk asset prices. It'll crash real estate and the stock market. And so he'll be left with the worst of both worlds. We'll still have the same inflation, all else equal, and stonks will be in the toilet. So Jay's got a big choice to make here. And he really doesn't have a good choice. There's nothing good from his perspective, because, stocks are really important. Obviously, if I were in his perspective, it wouldn't be so hard. I would pretty much shred the entire Federal Reserve System. But then again, I'd probably get assassinated if I really tried to fight the Fed from within. And so, given that I'm not the one making those decisions, you have to try and get inside Jerome Powell's head. You have to try and get inside of any Fed chairman's head. And, what I've learned over the years dealing with people from the Fed is that there's not a whole lot going on inside their heads. They're reactionary creatures. They're looking at what's in the headlines from week to week, and that's how they're basing their decisions on. Should we hike rates? Should we not hike rates? By how much? Should we start QE? Should we end QE? Should we taper QE? Should we do QT? It's all reactionary. There is no grand master plan. And I think give Powell some credit. He was he was honest about that, and he has been in the past saying, well, we can't predict. We don't know from day to day what we're going to do. He's not being coy there. They really don't. And the fact that we could not get a major rally out of a Fed day should be very disconcerting for people who are in the stock market. In fact, when Powell started talking, normally when Powell starts talking, that's when the rally kicks into overdrive. Normally the initial statement, maybe there's a little uncertainty in the statement. Maybe there will be a bit of a dip in the day. Normally it's, and then once Powell starts talking, he's spewing pure, dovish propaganda, and people buy into it 100%, and the market just goes straight up from that point on in the day. But today, when Powell started talking, stocks across the board took a nosedive, and they didn't bottom until he stopped talking. And it's not like there was a big overall drop if you look at percentage-wise today, but if you look at it from the highs, stocks were up significantly today, and they ended up close to even, if not down a little bit. I think at the highs today, the S&P was up 2.2% and closed negative. And so the last 3 days have been extremely volatile, and the Fed was not able to bring order to that. And so I would tend to think that by the next meeting in February, in the next Fed day, the situation is going to deteriorate significantly, because there's no hope between now and then. If Powell was going to come out and be super dovish, today would have been the day. If he wanted to scale back what he's been saying, about rate hikes coming, if he wanted to address this prediction, I guess, that a lot of people are making of 4 rate hikes, which I think is preposterous. He could have addressed it and said 4 rate hikes is preposterous, but at this point he's still considering that. And, keep in mind the implications of this. If Powell is not going to come out and assert the Fed's continued support for asset prices rising year after year, going straight up. For years now, asset prices have been increasing purely, at the will of the Fed. All fundamental valuation metrics, were eclipsed years and years ago. And so if the Fed is going to pull support and say, and basically force the market to rely on, fundamental valuations, the prices of assets across the board have to plummet, years and years into the past. Years and years of gains will be lost. I mean, for stocks to go back to normal long-term, fundamental values, it would need to be like a 70% decline. Real estate prices would need to be cut more than half. And I can't see the Fed allowing that to happen. Inflation be damned. Inflation, is not fun for anybody, but it sucks a lot. It sucks more if you're a pure consumer and not somebody who owns assets, which are also going up. But if you are an asset holder, someone who owns stocks, bonds, real estate, you are much more threatened by a decline in asset prices than you are in a rise in inflation. And, the Fed is made up of asset holders. Everyone they know owns assets. All their friends at the country club, all of their family members. And for them, once you get to a certain, economic strata, 7% inflation, yeah, that might not be fun, but you can deal with it. What you can't deal with is your net worth getting cut in half. And so I don't know how the Fed could even consider allowing that to happen. And, the truth is they won't. It's just a matter of when will they admit it. The stock market will wring that truth out of Powell eventually. It's just a matter of time, and I certainly think it will be within this year. We're in January, we got till the end of the year. We're going to have net zero rate hikes for the year. If Powell goes through with with hiking rates, he will no sooner cut them. I mean, really, if you raised rates to something more normal, like let's say 5 or 6%, which the Chilean central bank just raised their rates from 4.5% to 5%. If something like that happened here, if we had 5% interest rates in this country, it would be the end of America. The U.S. government would be bankrupt. Our financial system would collapse. It's just, the country would be over. And so I'll continue to monitor this situation because it's going to get good. The most exciting times are ahead of us, not behind us. So with that said, I will see you folks back here tomorrow.